Capital gains tax, is it something that you have to pay, or are you exempt? That's the question. Stay tuned. Hey YouTube, it's Ashley with Keller Williams Real Estate, and there's something that I want to talk about. I get this question quite a bit. The market is really good, so I have clients, they've purchased their homes like maybe in like the 80s, 90s, 70s, and perhaps they're paid off, or they just have like a really small mortgage on them, and they wonder to themselves, okay, if I sell this, am I going to have to pay capital gains tax? I mean, everybody wants to know taxes, they're everywhere. Okay, so to answer that question, it's pretty simple, actually. There's just 3 questions you have to answer. Before I start, I just want to let you know, please subscribe to my channel if you have not. If this is your first time, subscribe. I have a lot of good stuff for buyers, sellers, people that are real estate agents. Yeah, tons of good things. The other thing that I want to say is I am not a CPA or an accountant, so definitely double verify this with your accountant. Especially when you start talking about cost basis, it's a little bit more complex than what I'm going to go into, and the 3 questions you can ask yourself. Okay, so probably the easiest question to answer for a lot of people is did you purchase the home that you want to sell using a 1031 exchange in the past 5 years? Okay. So if your answer to that question is no, then you're still good. If the answer is yes, then you're disqualified. Okay, so the next question is, do you have to pay expatriate tax? Okay, so if you're subject to that, then you might be disqualified, so you may not be eligible. The last question is it's kind of a twofold question, okay, because it's sort of asking about ownership, and it's also asking about residency. So the question is, have you owned the home for 2 of the last 5 years? Okay, and so that may be pretty straightforward. I mean, if you've lived there for 30 years and that's your primary residence, then you're great. Okay, the part where it gets perhaps a little bit tricky is the residence question. Okay, the residence question, because again, you have to have lived in the house as your residence for 2 of the last 5 years. So unfortunately, if you've been treating your home as like a rental property, there may be some complication there. You may not be able to be completely exempt. But if you talk with your accountant and you look at your cost basis, you may be able to, sort of like lessen the amount of money that you have to pay towards capital gains. So that's good. All right. And that's where you want to verify that with your accountant. What are the ways around that? So let's say you're an investor and you're like, oh man, I own several properties. Oh, I didn't realize I was going to have to do capital gains on all of them. One thing to do is a 1031 exchange. So what the 1031 exchange does is it allows you to defer the gain tax. So if you really like investment properties and you want to keep going, this would be a great time to trade up, right? Because the market is high. And what you could do is take the gain that you have in maybe a smaller property and purchase a larger property that would provide you with more cash flow. I mean, because that's really what you want, right? And what happens is you, there is a process. So you can't just simply sell it and be like, oh, I'm going to 1031 exchange it. No, there's some rules. You have to follow it step by step. You can't actually touch the money, the proceeds from the sale of the smaller property. It has to be held by a neutral third party. And if you touch any one bit of that money, like if it hits your bank account, then it's automatically has to be, the tax have to be paid on it. So there's a more in-depth process, but a 1031 exchange is a good way to go. And so, yeah, I mean, I think, yeah, I mean, if you are eligible to avoid paying the capital gains tax, there are some limits. So as a single person, it's only up to $250,000. And if you're married, it's $500,000. So yes, you're still eligible to do that. And so, yeah, it sort of depends on how much your property has appreciated. So if it's appreciated a lot and you have extra, then you pay tax on a little bit, right? Because maybe you've exceeded the limits. If not, then, yeah, you can literally like, sell your house. You made $300,000 on it, and you can put that directly in your bank account, and there's no taxes to be paid on it, which is awesome. So yes, capital gains. If you have questions, more questions about it, I'm going to leave a link down below to the actual IRS publication. And again, definitely consult your accountant, because there's, if you're treating it as an investment property, or if you just own the house, the cost basis thing is something to make sure you consider, because that would would reduce the amount that you'd have to pay taxes on if you did go over the limit, for example, and you passed all the rules. And similarly, if you are using it as an investment. So if you like the video, please like the video down below and subscribe to my channel, and I'll see you again soon, YouTube.